We started this YouTube channel with two major goals in mind. The first is to spread financial literacy to our community as much as possible. And the second is to document our goal to reach financial independence and early retirement by the age of 40. And this video is going to be something that encompasses both of those. In this video, we're going to be breaking down the details of everything that we're currently invested in. So what's in it for you? Well, you may not know this, but we're a couple that came from having a negative net worth, from having multiple student loans, and also having credit card debt, to reaching a quite substantial number when it comes to the amount of investments we have in our net worth. And we're not saying that this is something to brag, but we want to show you these details to show you that you can do it too. So stay tuned to learn about our investments.
Hi guys, I'm Tahseen.
And I'm John. Welcome to Millennial E.I.R.E, where we give you guys practical tips on reaching financial independence and early retirement. And if you guys have been enjoying our content so far, we ask that you could please hit that like button. It helps us out so much with the YouTube algorithm. And also, if you want to know anytime we release a video, hit the subscribe button and the notification button as well. So before we get started, just want to get a few things out the way. So this is an investment focused video of our personal investments, but something that's not included here are our high yield savings account investments. Our high yield savings accounts hold our emergency funds, both for our personal accounts and for our real estate, and any money that we use for future investments, so saving for the next real estate property. We didn't want to get too much into detail into these accounts because it can make this video longer than it needs to be. But if you have any questions on how high yield savings accounts work, please check out this video right here and it can give you all the details. And of course, you can always ask us a question below in the comments.
So as you guys can see, we have a pie chart that breaks down the percentage of all of our money that is invested into different categories. And what we're gonna do is break down each category to tell you guys what we're invested in, why we're invested in, and the exact dollar amount that we're invested in each category. So the first category is my 403B. And what a 403B is a tax advantage employee-sponsored retirement account, just like a 401k. In my 403B, we have invested approximately $1,475. So you might wonder why this number is so small. One of the reasons this number is so small is because I only invest into this particular account what my employer matches. And we've only been contributing that amount for about a year. This employee-sponsored account is not in the investment, it's just an investment vehicle that gives you tax advantages. And what we actually have our money invested in this account is an index fund called FXAIX. And this is Fidelity's version of the S&P 500. The reason that we decided to invest our money into this particular index fund is because it historically has had very good returns. In the last 10 years, it's had approximately 13% return on investment. And another reason is because of the low expense ratio that it costs to invest in this index fund. This index fund has an expense ratio of 0.015%, which is astronomically lower than some of the other mutual funds that are offered under the same brokerage account.
And when it comes to these index funds, I know we just threw a lot of terms at you, expense ratios and things like that. We go into deep detail of what all of this information is in this video above, so just check it out. So the next category that we've come to is our Robinhood account. And Robinhood is the company that we use to invest in individual stocks. This represents around 2.4% of our investment portfolio, and that's around $6,000. So within Robinhood, we have multiple stocks that we're currently invested in, and they're stocks that we invested in years ago. We were trying to figure out how to get rich and how to make money, and honestly didn't know much of what we were doing. But even since that time, we've always been dedicated to investing in dividend stocks. Dividend stocks are stocks that pay you money regardless of whether their stock value goes up or down. If you want to get more details on how they work, check out this video above. So within our Robinhood account, we have a few companies that we're invested in. So we have Microsoft. We have 7 shares and they pay out a 0.95% dividend. We have AT&T that has 21 shares that pays out a 6.81% dividend. Starbucks that we have 29 shares of that pays out a 2.11% dividend. Disney that we have 4 shares of that pays out a 1.48% dividend. Wells Fargo that we have 26 shares of that pays out a 7.79% dividend. And then finally we have Alliance Bernstein, which we have 18 shares of that pays out an 8.77% dividend. So when it comes to these accounts, we aren't active traders. We don't go and day trade and buy new stocks and sell new stocks every day. Like all of our other investments, when we invest even in individual stocks, we're in for the long haul. So that's why we love dividend stocks, because we can put money in and know that we're going to be getting some type of gain regardless of the rise and the fall of the value.
And I must say, even though he said we, but I had nothing to do with buying these stocks back then. But he did a pretty good job, because in our portfolio, we've never been negative. We've always been above. Even the stocks that were negative, the stocks that were positive were enough to balance out to make sure that we've never lost money. And that's not including the dividends that we get every quarter from each of these stocks. So this, I would say, is a pretty well balanced portfolio you got there.
Thank you, baby. Oh, and with that being said, just want to put a quick disclaimer here that we are not financial or investment professionals. So please don't just take what you see here and invest yourself and expect success. We encourage all of you guys to go and do your own homework and go do your own due diligence to make sure that the investments that you make are right for you and that you're also able to tolerate the risk. So our next investment category is my 401k with my job. And right now, this represents around 5.1% of our total investment, and that's around $12,800. And with this, we're also once again invested in FXAIX. But there's a difference here, and this is an important one to pay attention to. So Tahseen has Fidelity as the brokerage that her company uses to invest for their 403bs. Fidelity is also the company that owns FXAIX. So my company uses Nationwide. So because of that, in order to use a Fidelity index fund, I have to pay more in fees in order to do so. Even though I pay more in fees, it's still a great index fund, but honestly, we're still searching to see what the perfect index fund is going to be for us moving forward inside of Nationwide. Another thing that we also want to let you guys know is the breakdown of the 401k. So in the case of my company, I have the option of a traditional 401k or a Roth 401k. So long story short, with the traditional 401k, you pay taxes in the future when you take money out. But with the Roth 401k, you pay taxes now, so when you take money out in the future, you're not taxed on that. So I've invested in both of these accounts, and we've still been making decisions to see what's best for our current scenario. So as you can see here, I have around $7,000 invested in my traditional 401k, which is going to be taxed in the future. And I have around $5,000 invested in my Roth 401k, which is money that I've already paid taxes on. So you may ask why we're invested in both of these. So one of the benefits of investing in a traditional 401k is that it cuts down your tax liability for the year. So we've been playing with our tax numbers and talking to our CPAs to see what's best for us moving forward with our real estate investments and having additional income coming in. So if you have the option for a Roth 401k and a traditional 401k, we recommend that you talk to a CPA or a tax professional to see what's best for your scenario. So the next category that we have are my IRAs. An IRA stands for an individual retirement account, and it's a great tax advantage tool that you can use for setting up your retirement. And if you want more information on how they work, check out this video right here. So for my IRAs, that makes up around 15.2% of our investment portfolio, which is around $38,000. And this has a breakdown as well, very similar to my 401k. I have a traditional rollover IRA, and then I also have a Roth IRA. So the rollover IRA came from my previous job's 401k. Once I left that job, I took that traditional 401k and turned it into a traditional IRA, and that value is around $26,000. This IRA is an IRA that hasn't had any taxes paid on it yet, and I will have to pay taxes on it once I start to withdraw in the future in my retirement years. Inversely, I also have a Roth IRA whose value is around $10,000 at the moment, and this is money that has already had taxes paid on it. So this is money that's already had taxes paid on it. So this money grows tax-free. All of the gains from this, once I'm able to pull it out at my retirement age, I can pull it out and not have to pay any taxes on it at all. Which means that if I can grow it to multiple millions of dollars, I could have millions of dollars tax-free. So within both of the types of IRAs, I'm invested in one index fund, and that's the VTSAX index fund, which represents the entire stock market. Remember when we were talking about SXAIX, we were talking about the S&P 500, which represents the 500 top companies in this country. VTSAX, on the other hand, encompasses the entire stock market as a whole. So you get the safety of being diversified in the entire stock market. So this fund, we're invested through Vanguard, which is another great investment company. And this VTSAX index fund is owned by Vanguard. And the expense ratio that we have to pay for this is 0.04%.
The next category includes my individual retirement accounts, or IRAs. And mine, just like John's, includes a rollover IRA, which is a tax advantage account that I pay taxes later on, and that is about $33,000 for that account. And then I also have a Roth IRA, and that is approximately $10,000. And in this account as well, it's the same Vanguard VTSAX that we're invested in my IRAs as well. So our last category and the biggest part of our portfolio is the money that we have invested in real estate. And that number equals approximately $148,000. And in particular, the facet of real estate that we invest in are rental properties. We have 2 rental properties at this moment, and one is a single family home and one has 2 units because it's a duplex. And the single family home, the market value of it is approximately $285,000. We have $175,000 approximately owed on that, so that means that's how much money we have left on the mortgage. So the equity that we have in this property is approximately $110,000. And our duplex, the market value of that is approximately $304,000. And the mortgage that we have, the remaining balance that we have left on that property is approximately $266,000, giving us an equity of approximately $38,000. Besides the opportunity to tap into the equity of our house, we also get money from each property every month in the form of rental income. Or we have the option of selling these houses to get capital from that and use that for another investment. So real estate is, in our eyes, one of our favorite forms of investment for these reasons. There's so many different options on how to get passive income from it and how to progress in your road to financial independence.
So once you put all of these investments together, it comes up to a value of around $250,000. Guys, that's $250,000, and that is surreal to us. You're looking at a guy that 8 years ago was living in a college apartment that he couldn't afford to keep lights on. And I had to go and search for gigs almost on a weekly basis to just get food on the table. And from there, a year later, I had $36,000 in student loans and also a pretty expensive ring for my fiance that I wasn't sure how I was going to pay for.
And when I graduated from college, I had over $10,000 of credit card debt. And I just want this to be a testament to anybody watching that it doesn't matter where you are, you can build wealth for yourself with just educating yourself, being disciplined with your finances, and hard work. You don't have to come from money in order to build wealth. You do not have to win the lottery in order to gain financial independence.
And guys, like we said before, we're here to help you every step of the way as much as we can. We want to see you guys succeed as much as we want to see ourselves succeed. So thank you guys so much for staying tuned to this video so far. As usual, if you have any questions, comments, concerns, please feel free to leave them in the comment section below or reach out to us directly at our email right here at adultatima.financial@gmail.com. And if you guys enjoyed this content, please smash that like button for us because it really helps us out. And also, if you want to know when we drop future videos, hit the subscribe button and the notification bell and you'll receive that notification. So, until next time, see you guys.
See you guys.